lending your crypto or putting it to work with options. Which one is better? Today we're going to be covering pros and cons for both of these strategies, so stay tuned. So welcome back to another one versus one. This is where we compare crypto options to another crypto strategy that can be active, passive, whatever it is. So if you have any strategy that you like to see compared to crypto options, drop it down below and I'll make a video about it next. So lending versus options. If you don't know what crypto lending is, the name speaks by itself. Lending is when you deposit some cryptocurrency on an exchange. It can be decentralized, centralized, a protocol of whatever sorts it is, and you can lend whatever amount specific to another user, to another wallet, and you're going to get a yield out of that. So it's pretty much a loan. Someone is getting a loan from a protocol, and that money comes from someone that is providing these tokens. So someone is lending these to the protocol, and then someone is borrowing those funds from the protocol itself. So borrowing and lending is one of the earliest, one of the OG strategies for crypto. We have Curve, we have Uniswap, Sushi, all these DEXs, they started with borrowing and lending mechanisms. So you could have deposit your USDC or your ETH or your USDT, and you would have a base APY that you would get for providing that, for providing these tokens to, so that other people could borrow against that and do whatever they wanted, and then they would deposit back the initial amount plus the fees itself, both for who provided the money and the protocol fees as well. So this has been here for quite a while, and crypto options, they're actually relatively new to the market, but options itself, they are old as time. So even before the stock market, options were already a thing for centuries. We can trace options all the way to Japan back in the feudalism era when they had options on rice. So options that are not a new thing, and they're just starting now as something in the crypto space. So two very OG ways to make money, or to make your money work for you. One is more active, one is more passive. And as always, we're going to go with the pros and the cons from both strategies. So what are the pros of options? Well, we have huge returns and flexibility. So with options, you're very flexible. You can go for the passive route, you can go for the active route. Both of these are going to give you astonishing ROIs, especially if you compare that to traditional finances, what you're used to seeing on the stock market. With crypto options, even the passive side of things, they can be very profitable. So the returns is point number one. Point number two is the flexibility. So that means that you can choose different strikes, you can choose different expirations, you can choose different sorts of options. It can be buying options, selling options. It can be multiple leg strategies. So we're talking advanced strategies like condors, like spreads, like strangles. All of these are able to give you the flexibility to be profitable most of the time, especially if you know what you're doing, if you know how to use each of these strategies inside crypto options. And the third pro is profit in various market conditions. So as we saw in a few videos before, when the market was going down, we opened a put position and we profit from the market going down in that week span. So now the market seems to be testing the $60,000 support, a very strong support for Bitcoin. And if you believe what analysts or experts are saying, that we most likely reached the bottom for Bitcoin, and now is going to be up only for the next months, then what you can do, you can flip the position, and instead of buying a put, you can buy a call instead for whatever expiration you believe fits your risk management more. So there's a lot of market conditions here in play, and you can profit from pretty much all of those. So what are the cons for options? It requires a little bit of market knowledge. So if you're just coming in right now to options, first time user, you're going to have a little bit of a harder time if you were just doing whatever other passive strategy, mainly because you have to understand how options work at first. This is why we have a lot of videos here on this channel explaining you options, so you can take a little bit of your time during the day, maybe 1 hour, and watch these videos and understand how options work. You can start ahead of the curve and be able to profit even from the first options that you open. Another con of options is, depending on what strategy you do, you have high risks of loss. Depending if you're selling naked options or if you're trading options that require a spike in IV and then IV drops, you're going to be IV crushed. This is something that happens a lot. IV crush is something that happens to a lot of new traders when they don't do their due diligence, when they don't analyze their risks as well as they should. But again, all of these, they go away. These cons, they tend to go away with a little bit of understanding of the crypto market, understanding a little bit of technical analysis and understanding how options work, like what makes an option tick. So once you get that, you're pretty much safe with options. And last but not least is cost of premium. So premium cost can vary. It can be high, it can be low. This is why we use spreads here a lot on this channel. And if you don't know what a spread is, we have a link right here for you to check it out. So premium cost is something that can be negated. It can be mitigated if you're able to understand advanced strategies, which has multiple legs, which we make it very simple here on the topics by using the earn tab on our protocol. But anyways, premium cost is something that you have to keep in mind if you're just buying calls or buying puts. Well, what about crypto lending? Well, lending is very easy. Lending could be compared to pretty much a piggy bank. You're just putting your money into the bank and you're getting that whatever low percentage yield the protocol is offering. So kind of like a piggy bank of some sorts. The first pro is that it earns steady interest. So it's not going to be volatile. You will see the interest there and it's going to change very, very little. So if you see on whatever protocol that for your Bitcoin, for you to lend your Bitcoin, you're going to get 4%. So that 4% most likely is going to stay between 3 and 5%. It's not going to go all the way to 10. It's not going to go all the way to 0. So it tends to fluctuate, but very, very little. So it is a steady income. You're seeing day by day the income dripping to your wallet or to the protocol itself, where you can later on claim. Another pro is lower risk. You simply have the protocol risk itself, so the smart contract risk of someone hacking the protocol or hacking the smart contracts and draining the contracts. Other than that, you don't have risks, at least not on your end, as we're going to see later on. But the only two risks are smart contract risks and the credit risk, which we're going to be covering in a little bit. And last but not least, for the pro side, is that it is simple passive investing. I don't think you can make it as passive as this on any other strategy. So you just go, deposit, watch it grow. Of course, the growth is going to be slow, but it's going to be steady. So it is something that you need to keep in mind if you're going to go for the lending strategy. So what about the cons? What are the cons for lending? Well, the first con is credit risk. So for example, I'm lending my Bitcoin and then someone else, a user, borrows this Bitcoin and he's going to go trade with that Bitcoin. So he's going to go leverage this Bitcoin and try to make 10x, 100x, whatever it is. But he ends up losing all of his money. So when he comes back, he doesn't have money to pay back what he owes. So he's going to get liquidated. The collateral that he deposited for to be able to borrow the Bitcoin itself, that one is going to get taken by the protocol itself to pay me back as a lender. But most likely, depending on the risk itself, I won't see all the money back into my account because the user defaulted. So that's something that could happen. Again, now with these protocols, with newer protocols, we have a little bit more protection risks, health levels, margin levels for people to take care of their positions. So regarding that, we're kind of getting a little bit better with lending, but still it is a risk that you can run into. The other one is being dependent on borrowers. So let's say you're going for a very not ordinary token. So you're lending a token called Banana. So you're putting their Banana token for people to borrow. But Banana token is dead. No one wants to trade the Banana token, or no one wants to do anything with the Banana token itself. So you're depending on people to borrow that money. But because it is maybe a peculiar token, no one wants to. So it depends on what token you're going to put into, and it depends on someone that actually wants to borrow these tokens. So usually most of the time people stick with stable coins and big tokens, so ETH, Bitcoin, Solana, and top 10 market cap tokens. The rest, they kind of vary in risks. If you want to put your meme coins or altcoins to use for lending purposes, the API will be a little bit better than these bigger tokens, but you are going to be going for more risk. And third con is the returns itself. The returns, if you compare to anything else, they're pretty much very, very low. So we're talking about 1 digit. If you're lucky, 2 digits on the deep side of DeFi. So if you're lending USDC, you're going to be looking at 2, maybe 3, 4% APY by providing stable coins. Maybe you're looking a little bit more with Ethereum or a little bit more with Bitcoin. But again, it depends on what protocol you are, what network you are, and if there are any incentives going on. There's a lot of factors, but overall, you're going to be looking at maybe 1 to 5% APY across the whole year. So that being said, you can see how options, they have a huge return, even if you go for the more passive strategy. I, for example, sometimes open positions that pay me 1% per week. We did here some weekend spreads where we got 4% per week, sometimes more. But you can see how even if these numbers seem very, very low, and a couple of people commented that you're going to risk $500 to make 4% out of these $500. Well, yes, because if you look at the win rate will be above everything else. So little by little, this 2%, 4% that I'm collecting is going to be dripping back to my wallet. It's going to be growing my portfolio steadily. And the same thing applies to lending. But again, it is such a small scale because on options, I'm doing 1 to 4%, maybe even more weekly with options by opening spreads. They're pretty much like selling options. And on the other hand, I'm doing 1 to 5% a year with lending. Even if you bump it up to 10% per year by lending, you can do that way faster with options. And of course, this is not even considering market conditions, because if you're lending something that is not stablecoin, so if you're lending Bitcoin, so you made 10% per year, but Bitcoin that year went down 40%, well, guess what? You are in the loss with that strategy, because even if you have made 10% more, now you have the USD value of that strategy now is negative. It's 30K less. If we're talking about time, of course, lending does not require any overtime. It's just to deposit and withdraw. This is the only time that you're going to interact with this strategy. Options, it can vary. If you're being passive, you can do weekly options. So every week you go and you open a position. It takes you 15 to 20 minutes max. If you're doing due diligence, it could take a little bit more. If you're reading news, doing technical analysis, all these sorts of things. But still, I'd say not too much time that you have to spend to open a position with options. Of course, if you're speculating, so if you're buying options or if you're trying to make money by predicting where the market will be, so instead of selling options by predicting where the market won't be, you're trying to speculate, well, that could take a little bit more time or no time at all. If you're just a degen and you want to buy options, just go to the moon. But if you are trying to speculate, usually you try to be a little bit more specific on direction, volatility, size, range, these sorts of things. So it can take you a little bit more time. So to sum it up, we have right here everything in one image. So if you are very risk adverse, so you don't want to take any risks, lending is for you for sure. But you can also look into the passive side of options. If you don't know what I'm talking about, you can check out our videos here on the topics. This is mostly what I do with my strategy. I'm not a degen trader, so I try to make a little bit more passive income strategies itself. So this could be something for you to look into. And if you're more aggressive and you want something more active as a trader, or if you want more active to have higher returns, then you can look at other strategies with options. You can go long, you can do leaps, you can go debit spreads or just credit spreads that have huge returns. Whatever it is, options make it very, very easy and flexible for you to profit on whatever market condition. You just have to understand when to use each specific option. So once you do that, you're going to be able to speculate and profit on whatever market condition. So this will be it for today's video. I hope you guys enjoyed. If you did and you want to check out the topics, it's going to be the first link in the description. And if you have any questions, just comment down below. Again, thank you so much, and I'll catch you guys on Friday for another video. Peace.